Good morning, good afternoon, good evening, depending on where you are. And welcome to the second annual Emarsys Digital Festival, Retail Revival, putting the customer back in commerce. A very warm welcome to those of you who joined us last year for our first festival, Retail Renaissance. We're so delighted to have you back. And an equally warm welcome to those of you joining us for the first time. We hope all of you have an inspiring, thought-provoking, and enjoyable 3 days with us. I'm Sarah Richter. I'm the CMO here at Emarsys, and I'm delighted to be your host for the next couple of hours. But before we dive into the meat of today's session, and there's lots of that, I'd like to give you some tips and tricks on how best to engage with the festival and get the most out of your experience. First of all, I'd like to invite you to customize your experience. When you look at your screen in front of you, you can see lots of windows and icons. They can be resized and repositioned and click through, all there to personalize your experience, allow you to engage with the content available the way you want to, and ensure you get the most out of your time with us. Please take an opportunity to ask us questions if you have them. We've got a team of experts sitting behind the scenes ready to answer any question you might have. Simply submit them by pushing on that Q&A button that's sitting in front of you. And if you haven't already, join us now live on the Festival Slack community channel, where conversation and debate is already taking place, looking at some of the content that came before Mainstage today and some of the ideas about things that are happening. If you haven't joined the community, you should, on the right-hand side of your screen, see the call to action. If you click on that, follow through and register, it will take you straight through to the Slack community, where you can network and collaborate, not just during the festival, but after the festival is over. And last, but definitely not least, don't forget to continue to check the hub to register for more sessions. We have such a wealth of amazing content from fabulous brands and incredible speakers. It's live and on demand. And don't worry, if you see a session that's live that doesn't suit your agenda, or perhaps is in a time zone that's not convenient for you, that session is going to flip to on demand not long after it concludes, so you'll have the opportunity to watch it when it's convenient for you. Which leads me to give you a feel for what's been going around the globe today already. There have been multiple sessions in multiple languages and time zones for our fantastic global audience. Some of the highlights that I would pick out would include Q Clothing in Australia this morning, Appliances Online in the UK earlier today, and Puma Europe earlier today. And there's lots more content coming. So these sessions that have already taken place are already available on demand. So after Mainstage, you can browse them at your leisure. And I'll be sharing with you later a few highlights of things that are happening after Mainstage that I'd suggest you might want to take advantage of. Those of you who joined us last year will remember that our inspiration for the festival came from the retail renaissance that we witnessed as brands and marketeers across the globe reinvented and reimagined themselves in the face of real struggle and constant change. And while COVID is sadly very much still with us in 2021, this year we are taking inspiration from the green shoots that we're starting to see, which we believe are driving the beginnings of a retail revival. But while we're seeing a gradual return to things like stores in some countries, we do believe that many of the changes we've seen in consumer behavior in the last year are here to stay. So, if 2020 was, for many of us, about struggle and change, 2021 invites us to adapt and acclimate to a brave new world, to one of digital-first retail. And while the ongoing health crisis, as well as data regulations and the demise of third-party cookies, are certainly going to continue to pose challenges to us as marketeers, we're seeing brands thrive by delivering remarkable customer-led experiences that drive predictable and profitable outcomes. So for the first day of our digital festival, we're going to explore the future of retail, the future of the industry, and talk about how retail leaders have reimagined their brands to compete with an ever-changing retail climate. So what do we have in store on Mainstage today? Well, I've got three fantastic sessions for this to walk you through. To start, I'm delighted to be joined by Ohad Hecht, the CEO of Emarsys, and Joanna Milliken, head of CX marketing at SAP. And we're going to chat about the unique opportunities Emarsys and SAP together are going to bring to customers, some of the changes we've seen in marketing in the last year, and get their perspectives on that future of retail that we just touched on. For our next two sessions, we're privileged to be joined by VP Principal Analyst at Forrester, Sucharita Kadali. Sucharita is an expert on all things e-commerce, omnichannel retail, consumer behavior, and trends in the online shopping space. And in her first session, she's going to share her perspective on the realities of retail in the rapidly approaching post-pandemic world. Following her presentation, Sucharita will be joined by two other industry experts, Kristen Smith, SVP Digital at Hannah Anderson, and Paul Terrell, CFO at Gaia, for a chat on the new reality of retail. We've got lots in store for you, and it's looking like it's going to be very exciting. So let's get ready to kick things off. For those of you that have not had the pleasure to meet them, let me give you a little bit more of an introduction to both Ohad and Joanna. As I said, Ohad has been the CEO of Emarsys, and he has been for well over the last 5 years. But in fact, Ohad has been with Emarsys for over 10 years. And so not surprisingly, he's passionate about customer engagement and Emarsys customers driving real business outcomes via our omnichannel customer engagement platform. Joanna is a digital marketing pioneer. You may not know she was the first employee at ExactTarget. And now in her leadership role at SAP, Joanna is continuing to focus on helping marketeers reach the right audience, the right content, at the right time. So I'm pleased and delighted to welcome both Joanna and Ohad to the Digital Festival today. Joanna, Ohad, welcome.
Thank you. Thank you. Thank you so much. Thank you both, Sarah and Ohad, for having me. It is a real privilege to be here with you both today and be a part of such a vibrant community of employees, customers, and partners. And I'm just thrilled to be here to talk to you both today. Thank you.
Great being here. I'm extremely excited. Naturally, I wish that we'll be able to shake hands and talk and interact. I miss this part of the ecosystem, but I'm guessing that's what we have right now, and we have more than 3,000 people that will join this event, and we are extremely excited.
Wonderful. Thank you both. Really, really thrilled to have you. So let's kick things off. So it's fair to say there's been seismic changes in retail and e-commerce in the last 18 months. But it's also fair to say that at Emarsys, we've undergone a few significant changes ourselves. And I'm not sure everybody's perhaps as familiar with it as those of us that have been living it on a day-to-day. Ohad, would you mind bringing everybody up to speed from an Emarsys perspective on how our business has evolved in the last year?
Yeah, sure. I'll start with the beginning, okay? So I think, for me and for the business, that was a roller coaster, like everybody on the face of the earth, trying to figure out what to do and how we're going to be impacted, physically and then in terms of the business. And I very much feel that, it's maybe once of a lifetime that, we have this pandemic and you get to operate in extreme unknown. So that was that, and I'm happy to be here now, healthy, and the business is in a good place, and the customer is in a great place, and we're partnered with SAP, and that's the end of the story. But if I break it down, what really brings us together as human beings is the ability to work together and adapt and to overcome problems. And if I look at the greater unknowns that we had, I'm grateful, really grateful for the customers, the partners, all of our Emarsians really work together creatively to find solutions and to make sure that not only that we figure things out, but actually we are thriving, and consumer gets what they need, and we as brands actually are also doing better than before. So really grateful for everyone, and thank you so much. Would like to take this opportunity. And if I'm breaking it down, let's look at a couple of components. And the first one is existing customers. For those of you who are working with us, yes, it was stressful, but I think that everyone pushed the envelope, to see how much more we can explore, how much more we can personalize the experience for the consumers. And we, from our point of view, just all the teams, 800 employees, did everything they could really to work with our customers and make sure that they're going deeper and they have more campaigns, and personalization is going to the next level. So, businesses will thrive. So that was one element. And we've seen many more customers really pushing deeper. And I'm happy to see that naturally, because that's what we do. So the more the system is being utilized and the more consumers are happier and, purchases are going higher, then it's a win-win-win. So that was one. Second thing, in new customers, not all of us were lucky enough to be digital ready. And there were some players that, had the DNA in the retail space when the pandemic hit. And then they wanted to figure out really fast, because if your shops are closed, then you rush to going online. And we saw decisions being made extremely fast by brands, really almost with the flick of a finger. Decision to open shops, contracting an e-commerce players, working with us. We brought really shops within 10 days, 2 weeks online, almost with full campaign. So, when we look at complexities in everyday life, and we think it's very complex, when we are being pushed, we can do things much faster. And it's us and it's everybody that operates today in the digital space. So that was second thing. Third, consumers. So purchases were going off the roof. It was just unbelievable to see it. I mean, there's one thing, that yes, everything is closed and we are forced to buy online. But on top of everyone that is so used to buying online, there is so many new customers out there that just didn't have a choice and didn't have the habit of buying online. So then we see them flocking to online shops and doing everything online. And if I need to quantify it for you in numbers or context, right? Black Friday is usually the biggest events of the year, and we see purchases growing in 30% year over year, Black Friday to Black Friday. And between March to May, we saw the level of purchase being higher than the recent Black Friday. So that was just really insane. So yes, much more personalization. That's what we saw. We saw new customers coming online and making quick decisions, to open shops and to operate online. It was phenomenal. We saw a lot of purchases. We grew up faster. And to end this period, to be fair, Corona is still around, okay? So, but at least we learned how to operate in Corona, right? We learned how to live in Corona. But we became part of the SAP family, and that was October of last year.
Fabulous. Thanks, Ohad. It was, I think you summarized it well. It was quite a year, without a doubt. So let's switch gears a bit. Joanna, I know, because we've talked about it, I don't know how many times now, that you couldn't be more thrilled that Emarsys is part of the SAP family. But I would love it if you could share some of your insight into what you think the advantage that SAP is going to bring to Emarsys. And you are a veteran of this industry, which is so fantastic. So it would be great to get your unique perspective on what really excites you about this acquisition.
Yeah, I'd be absolutely happy to. So you're right. I am totally thrilled to welcome this entire community, all the Emarsians, all of you as customers and partners to the SAP family. And, really first, I think, Ohad, hearing you and Sarah seeing this agenda for this event, I think it's really clear that your success stems from your commitment to customer success. And that is absolutely something that our two companies, SAP and Emarsys, share as part of our core values. And I think it's what's helped all of us help our customers navigate these really difficult times, as well as, of course, our companies actually thrive in supporting you and, again, navigating through all of this. For those of you who may not be familiar, with SAP, just simply put, SAP helps businesses run. And something like 60% of the world's companies use SAP technologies in some form or fashion. And I think marketers are most familiar with the customer experience products, the CX portfolio, as well as some of the commerce solutions. And when I think about, some of the advantages and what that means really for, what SAP can do to Emarsys, I think, first of all, as if I were an Emarsys customer, I think I would feel pretty good about knowing that the fourth largest software company in the world just made the same investment you did. SAP believes so strongly in the vision of Emarsys and its people and its products, and we just couldn't be more committed to that success. And as a veteran, as an old timer, I guess, in the industry is another way of saying that, when I see success stories like Puma, that's really quite remarkable. And I think I've only seen a handful of dramatic pivots and growth like that, moving so quickly in the industry and in my career. And that's what excites me. Also, I think the opportunity to bring so many products and technologies that are available really across all of SAP and expose this whole community to those so that you can start to connect commerce and data and all of the engagement and omni-channel personalization solutions you have today in really whole new ways. And when we think about that opportunity to combine the best of what SAP has to offer as that real backbone of industry and what Emarsys can do in really connecting that human interaction for retailers, I think we can open up a whole world of new use cases and possibilities together. So we're very excited about that.
That sounds fantastic. And I think it's fantastic for those of us that are starting on the journey, and perhaps for those and our customers and our partners who are starting to come along on the journey with us. And I think that kind of tees up where maybe we could take the conversation, because we've talked a little bit about it from an Emarsys and SAP perspective. But maybe, Ohad, you could start by talking about how you think what this is going to mean from a customer perspective very specifically, and how their experience with Emarsys is or perhaps isn't going to change, and maybe what you see is in it for them.
Yeah, I think that's the right question, right? It's always the viewpoint of what's in it for me, the customer. I think more than that, we are part of the ecosystem. So it's not only what's good for us, but what's right for our original vision and why we are here, and I'll touch it in a moment, but also what's right for the consumers and what's right for the ecosystem, and because we have many partners all over the world. So I'll start with vision, and the reason that we are here is personalization, right? We want to make sure that the experience of every consumer is being completely personalized. That's in essence drive engagement and additional purchases to the companies that we are working with, all the brands we are working with, right? And when you're looking at what we do, yes, we have a lot of data. Sarah talked a bit about the navigating within the needs to further personalize the experience, but also to navigate within the growing demand for privacy, right? So within the privacy rule, everyone wants to have better personalization. We want as consumers to be understood. That's why we exist. In what we do, we have a lot of data that we can really personalize the experience of the customer. But when you're looking at the way that consumers today interact with brands, it's not only marketing, okay? Yes, we have a lot of data, but if you really want to understand even better and to personalize better the experience of the consumers, then one needs to ask, hey, what is the customers actually doing when they are speaking with the support reps, and how they interact with the e-commerce itself, and what about analytics, and what about the sales solutions, and what about back-end? And when you connect all those insights together, you have a much better outcome and a much better ability to personalize the experience, okay? So when you're looking at only marketing versus total CX, your ability to drive and to cater for much, much more deeper use cases and personalization is bigger than what we're doing today, okay? So that will give us better abilities to personalize better and have much more use case. And I'll touch it in a moment. But one of the questions is, hey, are you going to change? Are you going to increase price? And I heard in a grapevine, no, we are going to continue to be part of the ecosystem, okay? That's not going to change. We're going to have an open ecosystem. We're going to continue to integrate. So if you choose different solutions, that's okay. We will be there. We'll provide the connectors. In that regard, it's not going to change, right? What is going to change is that, once you're building your stack, it's on you to connect the nuts and bolts. And that's a lot of a lot of work and you know it. And sometimes it works and sometimes it doesn't work. But when you're working on connecting the entire CX together under one roof, right, you can actually dig in deeper with what you want to do or what you can do. And it is easier and it's faster. So yes, you can continue to do all the use cases that we have up until now. We have even much more use cases, right? But the ability to execute on your dream use cases under one roof, that's going to be the promise of us working together with SAP. That's going to be the outcome that we are going to, that's the outcome that we're going to drive. So that's the second thing. Look, we are operating today in 13 different locations. So pretty much if you want to meet, then we will be there and we will work with you and we will serve you and we will work with you hand in hand along the journey of digitalization. But SAP is much larger, okay? And the ability for us to really meet you in so many other markets that we are not operating in today directly is really expanding us and bringing us to so many customers that want to work with us, and that's something that excites me. Lastly, I'm really looking forward to marry our agility and our expertise because we are marketers and that's what we know how to do, but SAP know how to build big businesses and how to scale to levels that, we are not familiar with yet. So when you're marrying those two things together under CX and you're really creating a tight integration, the outcome is something that have never been seen before in the industry. And that's what really excites me. And that's the advantage of working together.
It's really interesting what you're talking about there, Ohad, in terms of marketing's ability to really connect across the entire organization. And, that's been, I think, a mission and a vision for all of us, right? To break down the silos and make sure that the organization and every touch point that any consumer or customer is happening with our brand, that marketing is right there and delighting that customer. But in today's day and age, right, that's just never been more important. And the opportunity that we have to really influence that experience across really all parts of an organization is really right in front of us. And it's something that I hope that the combination of Emarsys and SAP that we can do together quite handily. So very exciting.
Thanks, both of you. And hopefully everyone listening is seeing that those of you that are familiar with Emarsys, that this is really just another step on a journey. And the more that Emarsys has been what we've been able to offer before, there's just all these other things that are complementary that are going to be coming with it. And it's going to be a really exciting time, I think, for all of us involved, which is fantastic. Let's pivot a little bit and talk about some of the themes around the festival as we're starting to get things moving. And I spoke last year about how we really themed things around retail renaissance. And this year, we're looking at a retail revival. And I'd love to hear from both of you, perhaps, how you feel that the festival narrative actually reflects a different narrative in the industry, flipping from that renaissance that we saw last year to a revival, and maybe touch on what you've seen in the changes in the industry in the last year.
Joanna, would you want me to start?
Sure, please do. Go for it.
Okay, so, part of creating always new solutions and innovating and, creating new stuff, there is a bit of it that you always need to explain why it is better and, it's change management and working with customers, because not everyone wants to change, right? And do things differently. And that's part of it. And we are always throughout the years advocating for personalization. Not always is easy to explain that, personalization equates revenue because it equates to consumer satisfaction. So some markets are more welcoming and more open to that. Others, it's a harder work. But what quote unquote delighted me is to see a speed of light year speed, that took place in the corona, and people that used to sell, I don't know what, retailers with DNA of retailers and having shops of 5 to 50% of the revenue coming from online shopping, understanding and realizing that, hey, if I'm not online, that's a question of survival. That's not, it's going to be nice to have. So the realization, understanding that it's a no choice, that survival, and that's where consumers spending time today. You need to be there. right? And if you further break it down, we looked at the world of, hey, a customer will have a DNA. And my DNA is either that I'm a retailer and I used to do things that way, right? And then I have an online presence versus I started an online shop and then that's my DNA and I open a couple of shops. And the realization over here today is that there is no such DNA, right? The DNA is I need to be able to sell the consumer and to meet the consumer wherever they are, irrespective if it's in social networks with buy buttons, right? Or online in a store or offline. And the experience needs to be extremely consistent. And this realization set in, I don't know, a quarter and a half, 2 quarters. It took us a lot of time really to convince and explain. Naturally, harder in the early days, and I think changes. It's faster, but that's the first thing, right? So DNA is no longer retail or e-commerce. It's about the consumers, and we need to change the business around where the consumers are. And I think as consumers, we are all better off. Second thing is personalization, because many marketers today still looking at the one channel, right? I'll do web marketing, or I'll do mobile marketing, and it will be push or SMS, or here is my email channel. It's not about that. It's about personalization, right? Let's understand the consumers and let's give them what they want. And if we give them what they want, they will give us business back because we're doing a better job than our competition. And what happened in the Corona is that a massive amount of new brands that either didn't work online or invest a lot of money, in marketing campaigns, create a lot of competition. So another realization was setting out pretty fast that it's no longer good enough to really only work on pricing or only market heavily to the customers. That's important as well. Okay, that's also very important. But personalization first, second, it needs to be consistent, and that's how I see actually the revival of the industry, consumer-centric. Wherever we are, actually we as consumers benefiting from the whole change.
Mm-hmm. Yeah, when I think of revival, my head goes to some of the same places, Ohad. In terms of that, I think it's I think about both two things. One is like what you were talking about. All the business models are changing. Manufacturers are now in direct sales, and people that were in direct now need to find other channels. And really, we have to reimagine all of that in really all new ways. And then it also brings us back to basics. Which is that age-old marketer's mantra, of getting that right content and the right audience and the right channel at the right time, and keeping up with all those channels and doing personalization right in a trusted way, where I, as a consumer, now want to engage with you again because that first interaction was delivered well. It's just all those things really coming to bear. The things that we did really well, I think, show even more, and the things that we weren't good at as marketers and retailers also show more now. And so I think the revival is a great theme, especially perfect timing, as many of us, luckily around the world, are starting to feel like we're hopefully heading into the roaring 20s and kind of coming out of all of this. So I think the theme this year was a great premonition for where we are.
Thank you both, Joanna. I love the analogy to the Roaring 20s. That's fantastic. I feel like we need to throw a Roaring 20s party now to celebrate. I have a whole image there now. Right.
With revival.
I love it. I think it's fantastic. So we've got one more thing to kind of chat about, as our time is starting to get a little short. Our theme for today is the future of retail. So specifically for Mainstage here, we're talking about the future of retail. And as I mentioned earlier, we're shortly going to be joined by Sucharita Kadali of Forrester, and she's going to share her insights on the future of retail. But before we hear from her, I'd really like to hear from both of you on what you think the trends are that's going to shape the future of retail, and get your thoughts on it. And then it'd be really interesting to see how they're echoed or perhaps slightly different from what Sucharita sees. Ohad, do you want to kick us off?
Yeah, sure. But for those who doesn't know me, me speaking with the hands and everything, and that's when my, not buttons being pushed, but I'm really passionate about that. So that's when I'm getting really excited. But I'll keep it short and to the point, okay? And with the hands as well. the one, the one is omni-channel sales. Okay, so that's again, consumer is the focal point, and we need to be able to buy wherever we are hanging around, and the responsibility of the brand is to be there. So that's number one. Number two is personalization, personalized experience that is consistent across all the consumer hangouts, and that's not easy to do. Okay, and it's on the web, and it's on the app, and it's in the store. And it's also in the email, and it's in the push message, and everything, and even direct mailing, and every system and every interaction that we have with consumers. So that's number two. Number three is the connection between the offline and online was not completely done. It's not completely done. Okay, so yes, there are really, really, really good systems that enables to identify consumers online, and then our demand for personalization within the boundaries of privacy are then being met. But I believe that with technologies like loyalty and cashierless shops, right, the experience and identification of the consumer can be dragged into the offline store. It means that we will start to see very similar experience to the one that we are getting in the online store. I'm checking myself, point number 1, 2, 3, and the last one is personalization versus privacy. Okay, I don't think it's once against another. But for one hand, I want to purchase from shops that understand me and care about me, but I don't want to be my data abused, right? And we see government and nations coming up with new regulations like the GDPR and California privacy policy. We see tech giants rolling out new systems and new technologies that enhances the privacy. For instance, like the cookieless world, right? So another thing is, how do you keep being relevant and personalized, but also being uber private with the data that you're collecting with the consent of your consumers? Those are my top 4.
Well, riding again along on the privacy theme for sure, right? It's just top of mind, I think, for all of us. Like you said, Ohad, we have changes coming from tech giants. We also have tech giants who are being reviewed, right? I think it's going to cause a lot of us to rethink our retargeting campaigns and maybe how we're doing some transactional sending, and going to have to think hard about that. There's really no going back from privacy. We're not going to take things back, right? We're only going to expose and be more transparent. And again, I think in going back to basics, it's going to be all about permission-based marketing again, and making sure, right, that we're really compliant and that we earn that trust in order to do the personalization, right, in the right way. I think that need for speed is certainly not going to change. Again, there's no going back. We just showed everyone that we as marketers can move quickly, and when you're using technologies like Emarsys, you can move even faster, and the organization wants you to learn quickly, measure those results constantly. And so again, I don't think there's going back from that. And I think there's definitely not going back from what I call the COVID convenience, right? We as consumers, we want it all. We want to shop everywhere. I want to be online, in the store. I want to do all of that. And my expectations are only going to increase. And I expect you to know me now wherever I am, and be able to deliver all of that. Again, you can't take services away from me now as a consumer, because now I've been trained that I can do all of these things kind of the way that I want to. And I don't see us really backing out from that. And along those same lines, it's because I think logistics will continue to be front and center. We're more aware than ever of supply chain, in stock, out of stock, all of these things. And I think it's only going to continue that the customers expect that level of transparency really across the whole value chain within organizations and within retail.
Thank you both. That was really insightful. And it's going to be interesting. There's definitely some, because of course I've had a little sneak peek of the next session beforehand. I think there's definitely some things that align really nicely with what Suchari just talked about. And I think both of you have identified some different things. I think that's going to be a really interesting, see how it all evolves. I'm going to toss one final question out there, just as kind of as a wrapping us up, just to kind of get any final thoughts from both of you in terms of the conversation we've had, thinking forward for the festival, perhaps anything that we didn't cover that you thought you wanted to leave folks with. So, Ohad, can I pass it to you for sort of a little bit of a wrap up from your perspective?
Yeah, wrap up really quick. Personalization, digging half an hour already. Going deeper with personalization, because that's actually what consumer wants to have, across channel within the parameters of privacy. That's one. Second, consumer everywhere, and consumer is the focal point, right? And building businesses around the consumer and wherever they are. Things will not go back to the way they used to be, and things are moving really fast. That's my 3 notes to summary my conversation, my bit, before I'm handing it over to Joanna. Thank you everyone at attending this conversation, and thank you very much really for everyone that helped produce this event. Joanna, please.
Oh, absolutely. Well, again, just thank you, everyone, for allowing me to be here and to join this community. As a longtime marketer and technologist, I am just so excited by Emarsys. The products and strategy and vision for sure, but the people. And I just want to assure all the customers and partners and employees on the line that you are in such good hands with this organization. They're so committed, and I have just seen so many great things over the past 9 months in a really remarkable time for the business and for the world. And just know that now you're in equally good hands with an industry icon like SAP behind you, and we're just here to supercharge all of your success. So have a great few days. It's going to be action-packed. So thanks again.
Fabulous. Thank you very much, Ohad and Joanna. I really appreciate your time, your thoughtful insights, and I hope everybody else has enjoyed the session as much as I have. I know there was lots for me to take away and to think about. And the good news is that Joanna will actually be joining us again tomorrow, which is really exciting. And she'll be switching gears and putting on a little bit more of a product hat. And I'll tell you a little bit more about that session a bit later today, but we'll be delighted to welcome her back. So thank you both very much again.
Thanks so much.
So moving on, I think we started the day off really in a really good way, and I think we're going to move to our next presenter. As I mentioned, our next 2 sessions are actually going to be hosted by Sucharita, who's the VP Principal Analyst at Forrester. In addition to being an expert on e-commerce, omnichannel retail, consumer behavior, and trends in the online shopping space, Sucharita is actually also an authority on technology developments that affect the online commerce industry. You may actually have had the opportunity to read The State of Retailing Online, which is an annual study that Sucharita conducts and writes with NRF. If you haven't had a chance, you might want to take a look at it. In her first session, Sucharita is going to explore some 5 key themes around retail. Those will include how consumer spending habits have changed over the last year, something that Joanna and Ohad definitely just touched on. The rising trend of D2C, or direct-to-consumer, in our industry, and we're definitely seeing some of that. And that's going to be a theme that's picked up by some of our other presenters throughout the festival. How, and most definitely how not, to run a successful subscription model, a topic that's really top of mind for many retailers, and absolutely for one of the guests who's going to be joining us later today. And what metrics retailers should be focusing on when measuring the success of retail. This is always top of mind and always a challenge. Once we've wrapped up Sucharita's presentation, she's going to be joined by 2 industry experts, Kristen Smith, SVP Digital at Hannah Anderson, and Paul Terrell, CFO at Gaia. And they're going to have a chat around the trends that Sucharita's raised, talk about what they're seeing in the market and what they're seeing in the industry, and add their insight to what you've already heard from Joanna, Ohad, and Sucharita. It's going to be a fantastic, action-packed couple of sessions. I think you're really going to enjoy it. And so it's my very great pleasure now to welcome Sucharita to the Emarsys Digital Festival. Sucharita?
Thank you. Thank you so much for having me here. I'm very excited, and thank you all for joining and listening. I hope that this is some interesting insights and information that I will be able to share. And I too am looking forward to the panel after this, because it's always fun to talk shop with industry friends and people who are practitioners who are living and breathing all of the issues that we're talking about every day. So I I want to talk a bit about what's going to happen in retail now and what are the trends that are shaping the industry. And I want to start with this image, which is actually a picture of, it's a drawing, an illustration of one of the Wanamaker department stores. The reason that I bring this up is because the founder of this company, John Wanamaker, is attributed with one of the most famous quotes in the marketing world, which is one that you're all familiar with. We repeat it probably almost every day, is, 50% of my marketing is wasted. I just don't know which half. Now, hold that thought because I'm going to come back to it, but I want to talk about some other things first and then build up to that. So when we think about what has been happening with respect to the pandemic and retail, there is typically everything from the growth of online grocery to curbside delivery to the explosion of e-commerce, online grocery, restaurant delivery. The list goes on and on. But one of the things that I think often gets overlooked, but yet is so important to our worlds, is how much the entire market cap and wallet share, as well as marketing share of the large technology companies, grew through the course of the pandemic. And when you look at even, kind of the four big companies that I tend to look at, Apple, Amazon, Facebook, and Google, and we look at even just what happened in the last year to their stock prices, you can see that it was extraordinary. And it was an enormous boost that they hadn't even seen, a comparable number in the years leading up to it. Now, I think that this is particularly fascinating because time and time again, the data from consumers and even retailers seems to suggest that these companies deliver less for their advertisers than the advertisers believe, or they deliver less than consumers actually give them credit for generating. And data like this, I think, is a great illustration of that. So at Forrester, one of the things that we do is we collect a ton of consumer data in the form of surveys, and this is one of the surveys that we do. And I apologize if the font is really small. I encourage you to try to increase the screen size, and I'll also share my contact information if anybody does want a copy of this data after. But basically, this is data about what are consumers most likely to pay attention to as a marketing format on the top, and then what are people most likely to ignore on the bottom. And interestingly, all of the digital forms of advertising that have grown in the last several years are on the right-hand side of the slide, including marketing through companies like Google and even Facebook. So again, just repeating, the consumer is most likely to ignore that digital advertising and the least likely to pay attention to it. Meanwhile, when we look at what are the things that people are most likely to tune into, a lot of it is the traditional offline media that marketers are actually leaning out of. And most interestingly, on the far left of the slide, the most effective form of advertising, at least according to what consumers say that they pay attention to, is interestingly in-store ads. And that too is something I'm going to come back to. But it's just really, really interesting when we look at where is the money going and what is people's mind share, which is a little different than their eyeball share, which is often how we attribute value. The other thing that I think is really, really interesting is we even have a holdout sample of what happens when we actually cut off big tech spending. And that actually happened last summer. It rarely happens because once marketers choose to invest in things, they rarely have the ability, the audacity to completely, shut things off to see what the impact is on an overall business. But it happened last summer after the George Floyd riots, when a slew of companies, almost 1,000 marketers, decided that they were going to boycott Facebook for all of the fake news and other, kind of issues that Facebook was propagating. And what that was is essentially it was a case study of what happens when you cut off a major form of advertising. And the result was frankly nothing. So what we did is we looked at several dozen of those companies that were publicly traded and their revenues were clearly disclosed in their SEC filings. We looked at their 2020 trajectory. We looked at how it compared to 2019. And essentially what we saw was almost no delta in their, it was all COVID related factors, but really nothing related to the boycott that would have caused revenue to go up or down. And in fact, almost half of the companies that boycotted in the months and the quarters subsequent to the boycott actually saw their revenues going up compared to the previous year, even though we were still in the midst of the pandemic. So I just look at this data and really question, even when you cut off these major forms of advertising, if there is very little to no impact on a company, it begs the question of, well, how much value were they truly adding? Even when we look at, in the retail industry, the presence of brands on Amazon, or even more broadly than Amazon, just other marketplaces, there are all sorts of competitive issues related to the integrity of reviews, whether or not third parties have legitimately procured inventory, whether or not there's actually counterfeit of a particular brand that could damage the brand and ultimately even hurt consumers. The list goes on of issues that consumers are facing. And in fact, many consumers, about a fifth, according to surveys that we've done, actually are consciously concerned about transactions on marketplaces because of worries around the authenticity and the legitimacy of merchandise. And then you combine that with the fact that many of these marketplaces are often races to the bottom, and they win not because of issues related to fast shipping or free shipping, but because the prices are the most competitive, which essentially is everything that is counter to the experience economy and, kind of differentiating yourself based on quality that as an industry we've been trying to push for such a long period of time. And where I want to kind of wrap this up with is that everything that we have done in the last decade with respect to marketing has been a phenomenal boon for the tech companies, but it has not done as much to help the outcomes of the businesses that are advertising. So in short, what I would say is that we have gotten really, really good, even in a world of technology, in a world of measurement, at measuring the things that don't matter. And that is something that we need to absolutely change and rethink and really hold the marketing dollars that we're spending accountable to true incremental dollar volume that these companies drive versus what they purport to drive or what marketing takes credit for because it is often sales that would have happened anyway. And just to sort of lay out what the data here is on this slide is I look back to major transformations in retail. And when I go back to the 80s and the 90s, the big disruptive changes in retail back then were what I'll call the Walmart and the Costco eras and, kind of mass merchandise and the warehouse clubs. And those businesses in like the 80s and 90s grew tremendously, even in the early 2000s. And they had triple digit growth, which is very similar to what we see with the big tech companies, which is the yellow number now. Now, the brands that were dependent, the partners, the companies that essentially bought their slotting fees into these large retailers, they didn't grow as fast as, the big behemoths, but they were nonetheless growing at a relatively strong double-digit clip. For mature businesses, that's a good thing. However, when we look to what's happened in the last 10 years to those same types of brands, their revenues, which is the third, it's like the second to last chart on the right hand, the second to last bar on the right hand side, their numbers have actually gone down. So they spend more with the tech titans, but they actually haven't seen their revenue go up at all. Meanwhile, there are a handful of brands, there are a handful of companies that have been what I will call holdouts from big tech. They have focused more specifically and more pointedly on direct-to-consumer selling, or they have focused on owning their own customers with first-party information. Those companies have actually done better and outperformed the companies that have really, really leaned heavily into the tech titans and the advertising that the tech titans purportedly provide them. And that brings me back to the John Wanamaker quote, which is, even though we have so much more tracking capability, we have so much more technology, we are so much more obsessed with attribution, I would argue we still don't know which half of marketing is wasted. Now, all that said, things are changing tremendously, especially for the titans. And these are companies that around the world are facing all sorts of regulation and fines and threats of being broken up due to antitrust issues, privacy issues, potentially even broken up as disintermediated from their intermediary role. That's actually one of the things that was just proposed the other day by the United States federal government was potentially not enabling any of these companies that have first-party relationships and are competing essentially with their third-party sellers. So that will be fascinating to see if that in fact passes, because that would be a game changer for the entire retail world and every advertiser that works with these platforms. Now, that brings me to my first big trend that I want to talk to you about. And when we look at what is happening or what's traditionally been retail and where the retail industry is headed, I think that this slide illustrates it really well. When we look at traditional retail, it has historically been multi-category, multi-brand merchants. It's the companies like, the Walmarts and the Targets, but also it was department stores historically. Even big box stores I would put into this mix because they were companies that were essentially working with the brands, but they were the interface to shoppers. A lesser part of the retail ecosystem, but nonetheless a part of the retail ecosystem were brands going directly to consumers. And you typically would see this in sectors like luxury. You may see this in things like apparel. And certainly you would see this in sectors like consumer electronics, where you had companies like Dell and Apple, selling directly to shoppers. Now, in the future, what is almost inevitable is that those large multi-category retailers shrink. And we're going to talk a little bit about that because that is something that has been a trend that we have seen for the better part of the last couple of decades as department stores have struggled. Big box stores have been purchased by private equity and essentially, kind of decimated to the point of bankruptcy in many cases. And that's given way to two other types of retailers. First is the growth of those brands that we first started to see emerge over the last couple of decades. And we will now see two new types of brands growing in the retail ecosystem. The first are those digitally native, vertically integrated companies that now have almost no barriers to entry. They have Shopify platforms and easy ways to produce products on demand, as well as our favorite household names now all selling directly to consumers. And that is on a collision course with marketplaces. Marketplaces which absolutely are companies like Amazon, but also exist and through every other tech titan as well. Apple has a marketplace through the App Store. Google's entire PLA ecosystem is arguably a marketplace. And Facebook, of course, not only has literally a marketplace, but also its entire shopping experimentation structure on Instagram, which is also a marketplace. So you have these marketplaces growing, and you have brands growing as well. And the challenge is how they both coexist in the world. And where I see brands really leaning into is to actually be selling directly to consumers and to eschew, to completely give the Heisman to the marketplaces. And we'll talk about some of the reasons why, but I first just want to give you an illustration of what I mean by, a traditional beloved brand going directly to consumers. And Dyson is a fantastic example of that. It's one of my favorites because it is a brand that people often don't think of when you think of a DTC brand, yet, particularly because most of its business has historically been wholesale. But when you go to the Dyson website, through the course of the shopping experience, they explicitly tell shoppers at multiple points in the interaction that they encourage you to purchase directly from them. And they give the shopper a number of reasons to purchase directly from them. Everything from the extended assortment that they're able to provide to special 1-800 post-transaction call numbers that they provide, as well as even additional levels of service that they provide to those shoppers post-transaction. And that's really the level of what we're talking about when we think about DTC. Now, at the same time, we know that brands are finding tremendous value, and they can find tremendous value, I should say, from their DTC efforts, and it goes in a couple of different directions. First is that many brands actually do find their DTC efforts more profitable, which actually busts a big, big myth that many brands have historically held that, all sales are equal. And what our data that I actually conducted in a survey with a bunch of brands over the last few months is that that's actually not true. And their DTC offering is more profitable. Not only is it more profitable, but you also get that first party data. And we're going to talk a bit about the power of first party data in the panel. But also just the fact that enables that greater lifetime value, that enables a mailing list of people that these companies can reach out to, and knowing what we do know about retail, which is tried and true, which is that a disproportionate percent of almost every retailer's revenue is coming from a small percent of their most loyal customers. And if you know who those customers are, that is more to your benefit. And there you have the value of first party versus distribution. And the piece that is important and how things have changed so tremendously is that the web has decreased the cost of doing business. In the past, brands would be reluctant to have physical stores because they would have to purchase real estate, or they would have to rent, physical space. And in the world of the internet, you literally can kind of stand up a Shopify site, but which is extremely inexpensive. And especially when consumers already know your brand, which the quotes on this slide essentially illustrate, which is that consumers are now familiar with going directly to their favorite brand sites. In some cases, they even actively prefer going to those brand sites because the brand, they believe, has the authentic merchandise, has the non-counterfeited merchandise, is more likely to be able to handle a return more effectively, and is going to handle the post-transaction servicing of whatever that product is, whether it's shampoo or whether it's a sound system, more appropriately and often better than certainly what a marketplace can, and perhaps even better than some of the trusted multi-category retailers, the big box sellers of some of this product historically have been. Now, one of the things that I will often get asked in response to, kind of my advocacy of DTC is, well, what do you do with the channel conflict issue? Because aren't retailers going to push back against this? And in fact, it actually turns out that it's less the retailer that pushes back against this. I worked in my past at Toys R Us and Saks, so two of those multi-category, multi-brand retailers, and they could care less about, the merchants there, about what the brands were doing. It was more a psychological, kind of sense on the brand's part that they felt that, kind of their retail partners cared more about their direct-to-consumer efforts than in fact the retail partners did. But I think that the data here illustrates a really, really interesting point, especially when we're talking about digital sales, is that when brands embark on DTC, it is not the traditional wholesale channel that brands get eroded from if, in fact, you're not even in a growth situation and everything is a net zero opportunity. It's a zero sum, economy, that it is actually DTC eroding marketplace sales, which is a really, really interesting kind of trade-off, because marketplaces, for the most part, have invited themselves to the retail party. They, in many cases, didn't even have direct relationships with brands, but used tactics like retail arbitrage and sloppy distribution to often get access. They were never, in many cases, authorized sellers, but yet merchandise showed up on marketplaces, and because they were offered, consumers would purchase those products, and then you started to see a greater and greater percent of sales going through marketplaces, often at the expense of those traditional wholesale partners. And what DTC can actually do is pull sales back away from those marketplaces. And remember, what we said is that the advantages of DTC are that higher margin and that first-party data. And if you can pull it away from the marketplace channel, that ends up being a win-win for the brand, the consumer, and ultimately for the traditional distributors with whom brands have legitimate, long-standing relationships as well. I'll also add one other point, which is that one of the reasons that brands at this moment in time still see relatively anemic sales from their direct-to-consumer businesses, with some exceptions, the biggest exceptions being companies like Nike as well as Nespresso. But for the most part, companies have not leaned in a heavy, strong, and impactful way into DTC. The vast majority of brands that I see and I work with have terrible e-commerce websites. Not only that, where they don't offer things like free shipping offers. They don't offer the full assortment of their products. They don't do price matching. And they certainly aren't doing anything experimental from an omni-channel standpoint, like working with their traditional store partners to manage fulfillment, or engaging other tactics like marketplaces on their own site so they can test new product categories or new brands. So that is something that is a whole world of opportunities that brands need to embrace. And the only brands, there are a handful of brands that I think have done it really well. And they often do it really well when they hire e-commerce experts, often from the outside. What I see as some of the biggest mistakes that brands often make is that they take individuals who have no digital experience, who've been at the company for like 20 or 25 years, and put them in charge of digital. And you end up with websites where there are typos and product detail content missing and no alternative images. They don't have an understanding of the 101 of e-commerce. And the companies that do really well are those that have taken executives from places like The Gap or Best Buy, who have lived and breathed e-commerce for the last 20 years, and put them in charge of these very, very nascent businesses. So that brings me to trend 2, which is that we see, which is really about the dark blue on the chart here. And we know that retail, traditional retail, the multi-category, multi-brand retailers are amongst the most challenged in the entire retail ecosystem. And their sales over time are at risk. Now, that said, and in some cases, some of those sales of that ship has sailed, and kind of many of those businesses are already out, like Toys R Us. But what the future holds for those that remain in sectors like grocery or mass merchandise or even, electronics is new monetization opportunities with the assets that they do have remaining. And some of the biggest assets that these companies do have remaining are rich store footprints and lots of consumer traffic still. Now, one of the lessons that I would argue is really one of the most important lessons to take away from big tech, because I know I spent a lot of time talking about the downsides of big tech, but there are a lot of great lessons to learn. And one of the biggest lessons is that these are companies that themselves have been disrupted, even in the last 20 years. And what they have invariably done to survive and thrive is that they pivoted their businesses and they found new revenue opportunities that have almost completely transformed who they are now from who they were 20 years ago. And I contrast that with retail, and I challenge everybody who is working with a retailer to ask yourselves that question. If you had to envision how you would be different in 20 years, what would that look like? Because arguably most retailers, part of the reason that they often go out of business after, a few decades is that they don't evolve, and, they're milking a strategy that may have been relevant, decades ago, but they didn't shift and change. I had this conversation with somebody about Lululemon as a great example, because they bought that company Mirror last year, actually. And there are a lot of questions in the retail world about whether or not that's the right strategy. And what I would say is it's absolutely the right strategy, even if it doesn't work as an investment, because at least they're envisioning a future that in 20 years may involve them not selling apparel in the future. So that is something that I think is really, really important and exciting to think about. One of the things that we see as a big opportunity is really this notion. I'll get to it of the monetization, but it starts with the data here, which is that there is a belief, and I think that this is part of the reason that so much digital marketing is still nonetheless spent on the large technology companies. Is there a belief that all this research starts with only Google or Amazon or Facebook? And what the data on this slide shows is that when you look at the entire ecosystem of across different product categories, whether it's furniture or an automobile or whether it's an everyday consumable, there are so many different places that consumers research their transactions. Amazon is not the only company, and many people don't research their transactions at all. But what's fascinating is that this list is so fragmented, and there are more than a dozen different touch points online and offline that consumers explicitly say they use through the course of their transactions. And that brings me to the opportunity that retailers have with this concept of retail media, which is essentially taking advantage of their physical assets as well as their digital assets, which is often their traffic, and being able to sell marketing dollars on top of it. So remember on that earlier slide when we said the most effective form of media that consumers said that they were most likely to pay attention to was in-store ads. And that's really what this is that this is that monetization. Because if that's what is driving a sale far down a purchase funnel, the retailer is actually in the best position to capture some of those very valuable marketing dollars. The shopper is down the funnel, they're a captive audience, and they are in a shopping mindset. It's not like a content site that is spamming shoppers with random information. And a lot of that's going to go away anyway with the decimation of cookies. But when we look at, the opportunities here, it's everything from on-site advertising. It could be endemic advertising, which is like a brand selling on these sites. It could be non-endemic. It could be, and this is what I think is really fascinating, it could actually be an ad from Amazon Video, trying to promote its latest series. So that's just brilliant, because it's a way that all of this money and this mindshare shifted back, toward the tech companies. This is a way for traditional retailers to bring some of that back. There's advertising offsite, where these brands with their first-party data then have the ability to reach shoppers, again, with endemic and non-endemic content. And then there's even in-store advertising. And there are all kinds of new media vehicles that will be developed in the next few years. I would argue that anything that is a flat surface is potentially media. It could be a cooler screen. Literally, there's a company called Cooler Screens that does advertising on refrigerator screens. It could be a floor. It could be the exterior concrete of a building. All of these are potential. And in fact, there are even hologram advertising capabilities. So you could take any plane, even in thin air, and create an advertising format. Amazon has actually been probably the biggest catalyst here, because back in 2016, in their annual report, they shared a number, a line item called Other, which was essentially their advertising number. And in 2016, that number measured more than $1 billion. And that number has only grown exponentially since then. So in the 2020 annual report of Amazon's, that figure is now over $20 billion. And this is a figure that is growing faster than almost any other division of Amazon, and it is growing at an incredibly high margin. And this has essentially alerted merchants really to the reality that if they aren't even the only place that people are researching, and they are able to create this business with this huge margin, why can't other retailers do the same? And that's exactly what we're seeing. The other piece that I think is incredibly important that we expect to see traditional retail embracing, as well as even brands. I mean, everybody really is in such a crucial position to do this, is the importance of loyalty programs. And this is so important because, again, we know that a disproportionate percent of sales are happening from a smaller percent of consumers. And we also know from consumer data that loyalty is still underpenetrated. Very, very few people say that I belong to too many loyalty programs. They love their loyalty programs, even though they may belong to like 20 of them. Consumers actually do spend more with the companies that they are members of loyalty programs with. So if you can get a shopper locked into your program, that is something to your benefit. And the other things that are really, really interesting is that some of the best loyalty programs don't have to have a high cost like rebates associated with them. You can have value-added services, like a 1-800 number that special customers can call when they have a problem, extended warranties. There's so many other things that are possible as things that are attractive to shoppers that are not huge variable costs for merchants in the course of those loyalty programs. And then the last thing here, which I think one of the easiest ways that merchants can think of the value, kind of creating a value that is within the loyalty program, is simply to ask shoppers their opinions, to include those shoppers as part of their feedback programs. So 46% of people say that they would actually be happy to basically be a focus group for the companies that, they are members of a loyalty program for, which is amazing because most merchants pay money to create focus groups or to gather information from focus groups. And here are, some of your best customers holding up their hands saying, please ask me my opinion because I'm happy to share it. I also want to, kind of mention that loyalty can be layered with so many new business models that are emerging. And as we think about the future of retail, where it is likely to be more than just inventory stacked high in a physical location or an online website and simply purchased by consumers, but rather there's much, much greater richness in everything from membership models to subscription models, different ways of renting products, using products, and locking shoppers into new types of engagement. This is a list. Again, the font is a little small, so I encourage you to increase your screen, but a list of different essentially monetization tactics that we've seen in sectors ranging from commerce to media over the years that we expect retailers to embrace in the next several years. The third big trend, which I'm not going to spend a ton of time on, but is super important as well, is the growth of stakeholder capitalism. So we know that the world is literally on fire. And what stakeholder capitalism does is it twists the incumbent philosophy of shareholder primacy and acknowledges that many businesses have grown, but have grown by also contributing to so many negative externalities with their employees, in their communities, with their suppliers. They leave others holding the bag of the costs that they have often abused. And that is really what stakeholder capitalism is about, is making companies responsible for everybody and every entity that they impact, especially negatively. And this is something that we've seen really grow out of Europe, which has some of the deepest and most entrenched social value-based companies in the world. But it's also made its way to the United States as well. The SEC, in fact, is investigating not only kind of how to encourage this in publicly traded companies, but how to measure it and how to force companies to have consistent standards when they report against ESG, which is environmental, social, and governance issues. And when there is, because that's part of the issue and the excuse for not doing it is, oh, it's so hard to measure and everybody has their own version of it. But that's what the beauty of these efforts are, is that they are all attempts now to try to standardize these very disparate values. So in the interim, though, because I acknowledge that this is going to take some time, is in the interim, we still have companies, especially B Corps, companies like Allbirds and others, stepping up and proactively engaging with their customers and providing more transparency themselves and leading the charge on that. And in the course of that, trying to educate shoppers as to the questions they should be asking about other companies. And in addition to that, in the absence of better standards that have been government mandated, companies like Allbirds are actually exposing their spreadsheets for how they calculate things like sustainability, encouraging other companies to do the same and to take their lead. We also expect certainly much more in the way of circular retail. And this can even have ties to loyalty, where, perhaps part of a recycling program could be points back, or companies that kind of have this, have these tactics are able to, have deeper ties with some of their best consumers. And that can be everything from recycling products to recycling hard goods, and in exchange, bringing shoppers back into their ecosystem. Now, two things I do want to make sure that you are not distracted by in 2021 or even 2022. First is the whole cryptocurrency, Bitcoin dramas. I think that is something that is extremely distracting and is not something that most retailers will benefit from anytime in the near future. And the other is the obsession with the belief that everything that happens in e-commerce in China is absolutely transferable to the United States. I know I'm a little short on time, so I'm just going to quickly go through these 2 points. It's not that I am dismissive of digital currency. I actually think government mandated or government run digital currency is promising. And I am absolutely fine with the innovations that blockchains can deliver. And this is a great framework that was actually created like 5 years ago by a company called Medici on all of these, kind of different things that blockchain could do. Everything from voting, voting integrity to, actually monitoring counterfeit and versus authentic goods. So all of these are great use cases that have nothing to do with payments. And I'm absolutely a bull on that. But this idea of crypto, I would just be very skeptical about, because because the idea of crypto is being endorsed by many of the same people that led us to this world of surveillance capitalism that we are in now, and many of us are very regretful about. The other piece is about China, and the number of times I feel like in the last several weeks that I've heard about how much video shopping is going to take off in the United States because it is already so big in China. I think I may scream. But the reality is that China is very, very different from the United States. And a significant part of the growth of video shopping there is due to two things. One, the dearth of physical retail, and second, the dearth of other entertainment forms that are there. We have no dearth of ways to keep entertained, from gaming to streaming. But also many of those attributes that are held up in such high regard with video shopping in China actually originated with companies like QVC and HSN. And we know that playbook. We've seen that playbook. Those companies generate billions of dollars already doing everything that video shopping there does. Now, there is some potential differences in the amplification that a Facebook Live or an Instagram Live can do, but also you have to keep in mind that those audiences are much smaller as well, because they are often generated by the brands themselves, not, it's not like there's going to be a video shopping opportunity that's going to land on, every single Facebook user's homepage at the same time. Maybe at some point it will, but that's unlikely, based on their strategies. So I want to wrap up by saying that in retail in 2021 and beyond is three things to keep in mind. Brands and big tech are on a collision course. We expect DTC to grow. Retail media networks will cushion those traditional retailers. Loyalty programs will cushion those traditional retailers, especially if they do it well. And the third is stakeholder capitalism will change that lowest, cheapest, worst mentality of retail. This is my contact information. It's first initial, last name at Forrester. If anybody does want a copy of these slides, or you want to see, kind of in larger fonts, some of that text. And with that, I want to bring up to the virtual stage my panel. We're going to talk about their businesses. I have Paul Terrell, who is the CFO of Gaia, and Kristen Smith, who is the SVP Digital at Hannah Anderson. So thank you guys for being here today, and welcome.
Thanks, Sucharita.
All right. We may have some audio issues. Kristen, can you hear me? Uh-oh.
I'm off mute, Sucharita. I can hear you fine. I think you're on mute when you cut over there.
Oh, that is strange. Okay, can you guys hear me now?
Yes.
Okay, you can hear me. Okay, good. That is so strange because my little microphone didn't say that I was muted. Okay. So, Paul, can you just explain a bit about Gaia to the audience? I don't know that everybody knows it, and I know that you've pivoted the business, pretty significantly in the last few years too. So, can you talk about that?
Sure. People may not be familiar with Gaia, but they probably know our predecessor, which was Gaia with an M. We were a direct-to-consumer, originally catalog business that moved into a retail distribution network for branded yoga, fitness, and wellness products, including non-theatrical media. We launched into retail distribution, and at our peak, we had about 70,000 retail doors that we were distributing through. But ultimately, I joined in 2013 to lead the transformation to focus on direct-to-consumer subscription video on demand, which we ultimately sold the legacy retail distribution business in 2016 and have focused on building a direct-to-consumer content business that today is over 750,000 subscribers in 185 countries.
And it is a fascinating business because, first of all, you guys create most of your content, right? If not all of your content, or you're sourcing content from very unique, kind of wellsprings, correct?
Correct. And that was one of the transformations that we saw when you go through a retail, and you mentioned it in some of your remarks. When you go through a retail distribution model, the buyer at the store is ultimately who's deciding what goes on the shelf. And then how they promote it is ultimately what decides on unit sales volume. By going direct to consumer through our subscription video platform, we're able to get a signal of demand so that we can create content into that demand, but then more importantly, distribute it directly to that consumer. So speaking on Ohad's talking points of personalization and customization, that was really a big driving point for us to focus on building out this part of the business, even before it was really a thing. 2013, there was really only one other player out there, and it was Netflix. So now it's pretty ubiquitous that streaming is the way consumers want to consume content.
Paul, can you talk a little bit about the history of why the company divested its retail business and, kind of what was the push toward media? Is media more lucrative? Was there something fundamentally problematic? Was just more competition in retail? What were the drivers of that,
kind of two-pronged. One, we saw a lot of competition coming into our space on the product side. You mentioned Lululemon and buying Mirror. When we were originally contemplating whether we were going to spin out the subscription business or do what we ultimately did, which was sell the branded products business, the decision really came down to the factor of, can we maintain margins and which ones are going to have higher margins longer into the future? So you nodded to Lululemon thinking about not being an apparel distributor in 20 years. We had that conversation with ourselves back in 2012, 2013, and ultimately solidified the strategic decision to move fully in this direction in 2016. And so it's really about increasing margins, but more importantly, a direct relationship with the consumer so that we can get the conscious media product that we are creating to the eyeballs and the minds that can then utilize it and evangelize it and spread the world. And so that's really what we wanted, was that direct relationship with our members around the globe so that we can start to fire up a community angle to it. You speak about loyalty programs, but for us, community is the next frontier.
Yeah, absolutely. And and it sounds like international is also a big opportunity here too, right? Because that's always one of the challenges with traditional retail anyway, is that cross-border and global growth was always an obstacle. Whereas with media, it's much easier to reach a global audience, right?
100%. Technology has caught up significantly to our desire to be a global player, and we're able to serve our members in 185 countries from one location in Colorado using the technology that's available today that didn't exist, even 10 years ago. This wasn't a thing. We had to build our own streaming technology. Today, it's relatively plug and play, and it allows us, again, to have a really high efficiency from a business model perspective, but have a global reach without having to build out distribution channels, which is, again, the benefit of producing all of our own content and owning all of our rights. We don't have to go license those rights in any individual country to be able to stream content there.
That's great. And I want to come back to the subscription thing, but I also want to invite Kristen. Kristen, can you hear us now?
I can. Can you hear me okay?
Yes. Thank you. Yay. I'm glad you're here. Wonderful. Kristen, I don't know that everybody knows Hannah Anderson. Can you just quickly give an overview of the company and your role there? Because you joined a while ago, but you haven't been there forever. It's still a relatively new role for you.
Yeah, it is a relatively new role for me. And thank you, everyone. So Kristen Smith, I'm the SVP of Digital for Hannah Anderson. And for those of you who might not be familiar, Hannah Anderson's a great brand, almost 40 years old, really focused on the kids apparel space. We make the most amazing quality PJs and clothes. And of course, we were one of the early brands that got into the family matching pajamas. So for all of you who get tortured during the holiday time with the whole family matching, that's us. So, for mom, dad, all the kids, and of course the cat or the dog.
That's great. And I can definitely attest to the quality of Hannah Anderson. We, in one of my old companies, we would sell a lot of Hannah Anderson. So, yeah, I encourage, it's great baby gifts for everybody. So, Kristen, can you talk a little bit about why were you hired? How important was digital transformation to Hannah Anderson? Because I think that's a significant part of what we want to, hopefully have the audience take away here.
Sure. So I was hired about 2 years ago. And really, when you think about our journey as a brand and an organization, a lot of what Sucharita, you were talking about earlier, resonated. We started off as a catalog retailer. Nothing wrong with that, right? Great DNA, great product. But, a couple of years ago, I think the brand really started to understand the power of digital and really wanted to transform the organization to say, okay, we started off as a catalog retailer. However, the cadence is different. When you think about DTC and, direct to consumer, the data is different. There's so many different components here. And really what we wanted to do was modernize the experience, make sure we were much more customer centric, and really make sure kind of that pivot and shift had started, quite frankly. And so we were probably about 70% online before I joined. And now, we've actually expanded to be 100% online. So really, I'd have to say that part of the transformation and journey started pre-pandemic. But for us, the pandemic really just accelerated a lot of that. And so it's been a really fascinating experience to kind of take a brand that has such great product, such great DNA, but really, was lacking some of the digital tools, the digital skills, the test and learn mentality that was really critical, I think, for brands to differentiate themselves now.
We have talked about loyalty in the past, and I know that is something that's been an initiative for you. So talk about, kind of your vision for loyalty at Hannah Anderson. What does that mean? You had some really interesting, kind of ways to approach it. So I'd love for you to share some of that with the audience.
Yeah, well, you're kind of getting a little cat out of the bag a little bit. This is something that we're working on and thinking of. It's, not certainly customer facing yet, but for us, loyalty is certainly, there's so many different components to it, right? Our customers are incredibly loyal. We've been doing so much data work over the last probably year, if not, really focused in the last 6 months in particular. And when you start to look at things like our LTV curves, they don't even really curve. They're pretty, linear, which is a little bit of an unusual circumstance to see. And what I would say is that we know if we can get customers to 2 purchases, they're incredibly loyal. So for us, it's trying to start with the data, start with the information here, but also understand that loyalty is an emotional thing, right? And so at the end of the day, this is not a transactional loyalty program that we're looking at. We're looking at ways to incentivize all the right behaviors that we're looking for, whether that's ratings and reviews, whether that's user-generated content. Of course, transactions are lovely, don't get me wrong there, but also looking at how can we maybe incorporate things like a circular economy into the loyalty program, where resale is also, there's a huge resale market for Hannah Anderson. If you think about some of the great resale sites that are out there, when we've chatted with them, we find out that, in the kids space, we tend to be one of the top searched brands, certainly one of the top transacted brands. So how do we incorporate that into our own loyalty program? And this is just theoretical right now, but what I would say is maybe we give a point for resale, we give a sliding scale on how the customers transact with us. So there's a lot of different things that we're looking at here and really trying to bring that loyalty in a way that, provides the surprise and delight element the customers, I think, really get excited about when you do something a little bit special and different for them.
Right. Paul, I want to ask you about I want to actually ask both of you, but we'll start with Paul. Just talk about the importance of first-party data. I mean, obviously, all of your members, and you obviously have deep relationships with them. Just, kind of talk about what, kind of, could you imagine a world that was different, kind of, and what is the value that first party information can provide?
Sure. I'll answer the question, but I think I missed in my opening remarks why the CFO is on the conversation today with a bunch of marketers. I think part of leading this digital transformation was really looking at how we would intended to scale the business, and being a digital platform, digital online advertising was the primary avenue for scaling it. And so we devoted a significant amount of capital in 17 and 18 to grow as quickly as we could through digital channels. But as we started to look at transitioning from spending lots of money to grow to wanting to grow profitably, which today we're operating with a 20+% top line revenue growth and generating positive income and cash flows, which there's not a lot of streaming players out there that can say that. One of the biggest areas we focused on was exactly that, using our first party information to be able to spend our marketing dollars as efficiently as possible. And if 50% of our marketing is effective and the other 50% isn't, but we don't know which, I'd say we at Gaia have done a pretty good job of understanding which 50% wasn't and optimizing it around that first party data. So using things like site visits to understand what brought them to the site that might have gotten them interested, but they didn't ultimately sign up on their first visit. Maybe we capture an email and it allows us to then market to them with more relevant content that we know they came through. Or there's a stay informed lead capture that might come from there. But more importantly, once they come to the site and engage with us, it gives us an ability to market to them off site during the window. And even though cookies are going away, first party cookies will still exist for some time period. And so that's really been a big part for us, is understanding what brought them to the site, what they engaged with on the site, and then ultimately how do we attract them back to sign up and become a member.
So how important are the big technology companies, those large media platforms, in your marketing now?
In the beginning, they were pretty significant. Over 50% of our traffic was being driven by paid media, and a lion's share of it coming from paid social. But if you remember back 2016, 17, and 18, Facebook was really coming online in a big way for, outside of the original use case of college kids. And so it really allowed us to do marketing in a way that we hadn't been able to do before, which was interest-based marketing, or as we call it, psychographic targeting rather than demographic targeting, which allowed us to get very effective. But as it started to get saturated and we lost our first mover advantage on some of those platforms, we've actually focused on reducing our dependency on paid sources of traffic. And today, less than 50% of our volume is coming from any paid source. And the big tech platforms are probably under 25% today of our sign-up volume. And so we've done a lot to move away from that. And one of the things that we've really been focusing on now that we've got to scale is really using word of mouth marketing and our current members to help grow the member base and enabling them with tools to be able to do that.
Oh, interesting. Can you describe what some of those tools are?
Yeah, one of the things that we did last year was we actually created a product feature where an existing member could create a link to almost any piece of our content library and share it. And the person that received that link could then watch it within 72 hours for free. And so that created a lot of viral impressions at a very good time for us back in the pandemic period. So we were able to lift the awareness of Gaia at a time when a lot of people were looking for content that was in our genres. And so we refined that program to now allow those links to be evergreen effectively. But if they get too much traffic, so say someone posted it in a private Facebook group, and maybe we just get hammered with a lot of site visits to watch that piece of content, now we'll get an email capture to reactivate that piece of content. So rather than just giving it away for free, we actually get an email address that then we can do send them a link to reactivate it on a one-to-one basis. So instead of just giving it away, so to speak, we're actually getting an exchange for a lead, and a highly qualified one at that. And then we can create automated email campaigns to work to convert that traffic to a potential member.
I love that. That's such a great idea. I hope everybody's taking notes and thinking about ways that they could incorporate that idea into their own business. Kristen, I want to ask you the same question. How important is first-party data to your business? You're 100% DTC. So I imagine I know the answer, but just share with us, kind of your the value that you're getting out of your data.
Yeah, it's incredibly valuable, right? And we're starting to really also shift how the organization interacts with data, because, like I said, we're on a transformation journey. We're on a journey. There's amazing people at the organization that, we have the privilege though of having folks who've been around, literally since the brand started, and so they've seen such a difference and kind of an evolution on how to go to market and everything. So for us, it's not only just having that first party data and using the first party data, but how do we make it very democratic throughout the organization, make it accessible throughout the organization, and also help people understand why we're looking at things, how we're looking at things. So it's been both a journey for us to collect, use, leverage, but also to educate the internal team. And so it's really kind of been an interesting journey. And what I would say also is, some of the stuff that you were talking about earlier with incrementality and et cetera, it's something that we've definitely been doing a lot of. And it was interesting. Quite recently, we had a situation where we're testing out a new display vendor. And for example, they gave us some results that came back. We looked at them and we were like, looks a little too good to be true. I think we've all been there, right? When the vendor does the assessment of their performance, the fox watching the hen house a little bit. And so when we dug in and we started looking at it, we're like, interesting. You're not looking at Safari data. And considering about 61% of our traffic comes through Safari, how are these results possibly, you're accurate? So it's really interesting. You can make data also tell you anything that you want for the most part. It's really trying to understand what that data is telling you and how are you using it. So for us, it's been a lot of push, also in things about, getting people to register, getting people to do things like private sales and events like that so that we can get that data and really understand their customer behavior on the site. Very similar to what Paul was saying then. Once I understand what their journeys are, once I understand how they're interacting with us, then we can craft a lot of the great messages through email, et cetera. And for us, our direct channel, when I say direct, it's like email, direct traffic, organic, that's well over half of our revenue just in those kind of three elements there. So it's not to say that the paid channels and the big players aren't important. We tend to use them probably, I'd say, a little bit more for awareness. The space does get a little bit crowded sometimes, but the transactions, the revenue, and everything else for us, we've done a lot of testing and really are finding that she does prefer to come to us directly. She does prefer to shop with us directly. So really trying to make sure that we're creating that experience, whether that's on the site, on email, et cetera, to really kind of cater to those nuances that she's telling us when she is engaging. Absolutely critical.
So that's interesting, as that was going to be my next question, is where the big tech companies play. And it sounds like, they play a role in acquisition, but everyone, including Paul, was mentioning, they're more expensive though, right? They're, the cost is not what it used to be. So given that reality, kind of how have you adapted your acquisition strategy?
Yeah, well, for us, CAC is a measurement and a KPI that we look at, constantly. And, last year was also really interesting. And I think we all know that what an anomalous year it was. But the media costs were so low for us. And I don't know, it's not necessarily the way for everyone. Each industry is a little bit different. And I also have to acknowledge that we had a category of product that was really sympathetic during a pandemic, right? Everyone was wearing their nighttime PJs to their daytime PJs, et cetera. So it was a little bit easier for us. But what I would say is that we're constantly evaluating all of the different channels that are out there and wanting to make sure that we're understanding, what is providing the best return for us. So those are the measurements that generally we tend to look a lot at. And we've tested into a lot of different things. It's not actually driving the value. It's not driving the performance that we want. So turn it off. And it's constantly this testing and learning and optimization. Even within some of the larger, the Facebooks, et cetera, we do a ton of optimization there, all the different ad sets, all the different audiences, all the different creative, et cetera, et cetera. So we're constantly trying to refine our tactics. And, one of the other things that we're looking at are things like influencers. And so influencers are an interesting thing to me, right? Because it's a hybridized type of an approach. You have people talking about your brand, but they're doing it on the bigger platforms. So how have we been able to optimize some of the engagement there with the influencers? In some instances, building the direct relationship with them and really trying to make sure that we're, amplifying the ones that are working really well for us and talking to them and having them talk about us in a way that is very authentic and genuine, because that's really what we're finding is that authenticity is really what matters.
Right, right. Paul, I want to bring the conversation to subscriptions, because that is such a huge part of Gaia's business. Can you talk about, essentially, my big question is that I hear a lot of excitement about subscriptions, but every subscription business that I've talked to has just really high churn, and over time, the value becomes more challenged, because you're actually in much more aggressive customer acquisition mode to deal with the high churn rates. So how, first, do you agree or disagree with kind of that thesis? And how are you guys managing the churn problem?
Yeah, I would 100% agree with your thesis, but you have to look at it at the life cycle stage of your subscription business. And so, when we sold that Gaia branded products group in July of 2016, and we had about 100,000 members, and we wanted to ramp up quickly, 16, 17, and 18, we grew from 100,000 to over 500,000 people very quickly. And so we did have that quote unquote churn problem, because with the subscription business, particularly one focused in a very niche space like Gaia is, you might have people that are interested in what you're offering, but they come, dabble, and then leave. And so one of the reasons why we focused on getting to profitability at such an early stage was by slowing the growth rate down and understanding kind of what the natural speed limit of growth is. You can start to mitigate some of that churn problem, because when we look at our business, I would look at it more as an analog to a boutique, where someone might come in and be interested in the window because you have really nice stuff, but the first time they come in, they may not buy anything. But once they buy something, if you're a good boutique, they will probably have a relationship for you. And that's really what we've tried to do, is understand what part of the content library they're coming in for, and then make sure that we can serve them as well as possible through their life cycle to ensure that they stay. But the biggest function of churn is growth, right? We grew 80% in 2017, and I know that the majority of my churn occurs within the first 6 months of membership. So if you're growing 80% off of a relatively small base, it's hard to make forward progress over the long term. Now you slow the growth rate down to 20+% off of a bigger seasoned base, I have that natural retention that kicks in. So I think that there's just a misnomer about churn, and it's really that new customer acquisition churn that you have a problem with. And one of the reasons we've focused on our niches is we don't want to compete with a Netflix or a Hulu, right? We want to focus on the consumer that's interested in what we're offering, and then make sure that we can allow them to find us, or we find them at an efficient cost way, so that we can continue to perpetuate growing the business. And now that we've turned the corner at 750,000 members and being profitable, we can arguably grow indefinitely and stay profitable by focusing on the retention of the members that we're bringing in, and not trying to inflect the growth rate more than is capable, given that natural speed limit concept.
Now, a lot of attendees here at the festival are likely considering subscriptions or thinking if it makes sense for their business. Can you just share a couple of lessons learned? What advice would you give to a business that was thinking about, a subscription business, a digital or an online subscription business, I should say? It doesn't need to necessarily be digital.
Yeah, I mean, number one, coming from the CFO hat, it's definitely make sure that you have the systems in place to understand how to run a subscription business. When I started here, I was tasked with carving out what was a small little division that was focused on subscription as part of a bigger e-commerce platform. And we had hacked together a way to do a subscription transaction inside of an e-commerce platform. And it was very clunky. It didn't give me the visibility that I needed. So making sure that your systems can support subscription transactions so that you can get the visibility that you need to have the insights around customer acquisition, lifetime value, all these things that ultimately make the bread and butter of the business model successful are critical. Don't just go into it thinking that subscription's the new flavor, so let's do it, and we can just do it with whatever we have in place. It is a unique transaction. I run a high volume payment processing business, and I need to know it at the individual consumer level. I can't do it at a daily batch process level. So that's number one. And then I think number two is really about understanding as I said, the life cycle of what a subscription business model actually means. And one of our other technology providers that actually is a forefront in this subscription economy, Zuora, I'll plug their name, they actually started to spearhead this concept of moving into the subscription economy, because I think the majority of consumers, if you look at traditional music, it went from CDs to Napster, where everyone was taking it, to, okay, this is the wave of the future. Now we have iTunes for digital transactions and Spotify and iTunes Music for Apple Music for subscription. Content's gone the same way. I think clothing is moving the same way. And so I think there's a hybrid model that's available for people that have physical goods, but it's definitely the wave of the future from a consumer perspective in terms of buying only what they need.
Now, you had mentioned that you can't just, and it sounds like it's a bad idea to just have your traditional e-com platform be the subscription part of the business too. Are there specific companies, you'd mentioned one within the tech stack, are there others that are super important for companies to keep in mind?
Well, I think the payment processing engine is probably the biggest one, just given the nature of the transactions, and a lot of the friction that we saw early was because we had a homegrown system, and the majority of our customer complaints were around billing. And so if you don't get billing nailed, you do not have a subscription business. And so I don't want to overstate it, but really understanding how to do transaction processing, provide visibility and transparency to the member and the business stakeholders is critical, because if you want to launch a subscription business and you have any sort of stigma around your billing and transaction processes from your consumer sentiment's going to never get off the ground, and you'll be, fighting an uphill battle to start. So it definitely deals with the money, but it deals with the money on both sides of the transaction, which is why it's so critically important, in my opinion.
Yeah, absolutely. So I'm going to end with one last question for both of you, and then I'll hand the mic back to Sarah. Paul, what is on your docket for the next 12 months?
I would say the biggest piece of our next 12 months is really understanding how do we dig deeper into this member-driven growth concept that we've talked about. The influencer concept, something that's interesting, but we're not really looking for quote unquote necessarily paid mouthpieces. We actually want people that have an affinity for what we're doing, that represent it because it resonates with them. And that's an area that we're embarking on, because to continue to grow at the scale that we're at, we have to expand into incremental marketing channels. And I think that's going to be the biggest area of future growth for us, because digital marketing is only going to get harder as this privacy pendulum swings back and forth, and we need to diversify away from it.
Absolutely. Kristen, you get the last word. What is on your docket for 2021?
Sure. So, I'd have to say there's a couple of things, like I referenced earlier. The data journey continues for us. And really, the focus on that is wanting to make sure we have an incredibly strong foundation for this loyalty program and things like that, kind of to really be able to springboard. One of the things I would say, though, is that we're constantly looking at our customer experience in general. And so how do we differentiate in this space? The fact that we are, a digital player, so setting up things like personal shoppers. So really trying to push into loyalty in a way that is a little bit more, like I said, atypical when you start to think about some of the adjacencies to loyalty. So on the service side, things like that. But really, at its core, it's about the strong foundation of data that's going to enable a lot of this and really help us kind of power the loyalty program that we're looking at for the future.
Great. Thank you. And thank you guys. Thanks to both of you for your time and your wisdom today. So I'm going to hand the mic back to Sarah Richter. Thank you, Sarah.
Thank you, Suchricha, and thank you, Paul and Kristen. That was amazing. I hope everybody enjoyed it as much as I did. There was so much packed in there, and some fabulous, I think, really hardcore things that we can all take away and actually apply in our businesses, which is always, I don't know about you, but that's always my favorite part of these sessions, when I can find something that I can go away and think, wow, I didn't think to do that, and that could make a difference to my business. So thank you so much to all of our speakers for your time, your thoughtfulness, your insight. I know a lot of work went into thinking about the content and the insights you were going to share, and I know it's been appreciated by all of us. And thank you to those of you who's joined us today, because without you, none of this happens. So we appreciate your time. And that brings Mainstage Day 1 of the festival to a wrap, which is really exciting. But before we sign off and I let you go, there is still more to see today. We talked when we began about a bunch of sessions that had happened before we came to Mainstage. Well, the festival doesn't end now. We're going to move straight into a bunch of other really exciting sessions that I hope you'll be able to join us. One of them, Home Depot in Mexico. I think that's going to be a highlight. And we have an absolutely dynamite panel that's led by Don Brett, who's the Chief Digital Officer at NBG Home, Coty, Colgate-Palmolive, East Point Sports, and Walmart all will be joining him. Encourage you to try to attend that live if you can. But if you miss it, or if you missed any of our earlier sessions, don't forget, all the content will be available on demand in the hub. So go and check it out when it's convenient for you. Now, let's have a little sneak peek, if we can, at what's coming tomorrow. Because if today was full of fantastic content, well, I think tomorrow is going to pick up right where we started, where we left off. As I mentioned earlier, I'm delighted that Joanna Milliken will be joining us again tomorrow, but this time she'll be wearing a slightly different hat and partnering with Omer Sharon, who's our Chief Product Officer. And together, they're going to give you a sneak peek of our upcoming summer product release, which is due in July. You'll see how Emarsys is continuing to innovate and push the boundaries of customer-first personalization. There's some really great stuff in this release, and I know Omer's going to have a few tricks up his sleeve, so I encourage you to join it and take advantage of it. Following that, we're excited to be joined by Stefano Fardi from Facebook, who's going to share his insights on the future of commerce. And we'll wrap the day up with a panel of industry experts from the Salling Group, SAP, and Emarsys discussing recent innovations in personalization. You won't want to miss this day themed all around empowering commerce anywhere. And bookending both our main stage tomorrow, we have some fantastic sessions before it and some fantastic sessions right after it. Things will get kicked off in Australia in morning in their time with Booktopia, followed by Bluebell Group from Hong Kong. And then we've got Pizza Hut and Gymshark and Lounge Underwear and Reformation and Charbroil. I mean, it is barbecue season, right? Instabrands, and yet another Don Brett mega panel with Del Monte, Pernod Ricard, Ferraro, and more. So don't forget to spend a few minutes on the hub checking out some of these sessions and making sure you register so you can take advantage of it and learn some more, get the insights from these fantastic speakers. And with that, I'd like to thank you again for joining us today. I hope you've had a fantastic session. I started today by hoping that it would be insightful and thought-provoking and enjoyable, and I hope it's been all three of those things. I look forward to seeing you at the sessions that are later today, the ones tomorrow morning, and throughout the rest of the festival. But bye for now.